Welcome in this video. Will Xcn coin explode? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we take a general look at the chart in our previous analysis video, we observed that the price movements were forming a flag pattern. At that stage, we mentioned that the price was consolidating within a narrowing structure and discussed the possibility of an upward breakout. However, just as markets never move in a straight line, chart patterns can also evolve over time. In the current outlook, we can clearly see that the previous flag pattern has now transformed more into a descending triangle pattern. This change is actually a very natural process in terms of chart dynamics, because the buying and selling behaviors of market participants, volume flow, and overall market psychology directly shape the formation of patterns. That's why symmetrical consolidations, like flags, can sometimes evolve into descending triangles over time, with a horizontal support line below and a downward sloping resistance line above. At the current stage, in the descending triangle pattern that is clearly visible on the chart, the price has started to approach the downward resistance line once again. This line acts as an important dynamic resistance zone, where the price has recently been rejected multiple times. Based on the current picture, the price is about to retest this line, which represents a very critical phase. In technical analysis, descending triangles are generally known for downward breakouts. But this doesn't always have to be the case. If the overall market sentiment is positive, and especially if the lower support line has been strongly maintained, an upward breakout from a descending triangle is also possible. In such a case, the energy built up from the consolidation can suddenly be released, resulting in a very strong, sharp, and rapid price move. Especially as we're seeing now, when the price approaches the upper line step by step while volume remains low, it suggests that a breakout could occur with a sudden volume spike. If the price can break through this upper downward resistance line with strong volume, a sharp bullish wave may begin on the chart. The potential for this upward move to be fast, sudden, and impactful is very high. Another important detail here is the structure of the movement after the breakout. If the price breaks the line and manages to hold above it strongly, this could ignite the beginning of a new bullish trend. So it's not just the breakout that matters, but also whether the price can stay above the line afterward, because sometimes false breakouts can occur. That's why the price action following the breakout should be monitored very carefully. To summarize, the pattern we previously identified as a flag has evolved into a descending triangle due to market conditions and price behavior. Right now, the price is moving toward the upper resistance line of this triangle, and the move from this point will likely be the main catalyst that determines the short to medium-term direction. If the price breaks this resistance line strongly, the release of the built-up energy from the consolidation could lead to a very sharp bullish breakout. Following such a breakout, the price may target both psychological and technical resistance levels, potentially climbing to much higher levels. That's why the critical factors right now are how this upper line will be tested and whether there will be volume support in the event of a breakout. If volume confirms the breakout, the resulting upward move could present investors with a highly profitable opportunity. But we shouldn't rely on patterns alone. We need to watch other metrics as well. Stay tuned. When we approach the chart from a short-term perspective, we can clearly observe that the price is currently in the second wave according to the Elliott wave theory. As you may recall, the Elliott wave structure suggests that markets move in waves and that these waves progress according to specific rules and ratios. Based on these rules, we can dive deeper into our short-term analysis. First of all, the current second wave is a corrective wave. In other words, following the upward impulse move that began in the first wave, a correction phase is now taking place, as is its nature. This is a very healthy development because a market cannot move upward indefinitely. It needs to rest and pull back at times to gather strength. Right now, we are in exactly such a phase. The market is resting, gaining strength, and preparing for its next big move. According to Elliott wave rules, the second wave should never drop below the starting point of the first wave. The current price movement seems to be respecting this rule, so the ongoing pullback appears to be structurally healthy and is laying the groundwork for a new impulse wave. So what are we expecting next? The transition to the third wave. This is perhaps the most exciting part of the Elliott wave theory because the third wave is typically the strongest, fastest, and most aggressive wave. Among traders, there's a common saying, "You don't want to miss the third wave." And the reason is that this wave often brings much steeper upward movements compared to the others. At this point, an important technical detail comes into play: the length of the third wave. According to classic Elliott rules, the third wave should be at least 1.618 times the length of the first wave. This is the minimum level. By measuring the length of the first wave and multiplying it by 1.618, we can identify the lowest possible target for the third wave. This forms the first key level currently visible on the chart. Based on our current calculations, the minimum target for the third wave should carry the price to the 1.618 Fibonacci ratio. Once this level is reached, the wave structure will have met its initial objective. However, markets usually don't stop there. In environments with strong momentum and high buying pressure, the third wave can extend further and reach up to the 2.272 Fibonacci ratio. Therefore, if the market structure supports it, we should seriously consider not only the 1.618 level, but also the 2.272 level as potential targets. There is an important dynamic between these two levels. The 1.618 level can be seen as the first technical profit-taking zone. But in strong trends, especially when FOMO kicks in, the price often continues its momentum without slowing down and reaches the 2.272 level. So, while anticipating the third wave, it's wise to be prepared for both scenarios. There are also a few technical clues to watch closely. If the third wave progresses with weak volume, it may indicate a potentially failed wave. However, a movement accompanied by strong and increasing volume confirms that the third wave is healthy and likely to reach its targets. That's why it's not enough to just follow price levels. Monitoring volume charts closely is also critically important. To summarize, in the short-term Elliott wave outlook, we appear to be nearing the end of the second corrective wave. From this point, the third wave is expected to begin, with its minimum target at the 1.618 level. If the market gains strong upward momentum, the move could extend to the 2.272 level. This could open the door to a significant bullish opportunity for investors. The most appropriate action right now is to patiently and carefully follow this transition process. Because when the third wave comes, it will offer both sharp price movements and fast profit opportunities. But in order to seize those opportunities, one must be patient, wait for the right levels, and never neglect risk management. Now, when we take a look at the RSI indicator, a clearly defined downward trend structure becomes apparent. This descending trend line has been drawn from the previous RSI peaks in a downward direction and is still acting as an active resistance zone. In other words, the RSI has been repeatedly pressured downward from this trend line and has struggled to form new highs with each attempt. Such a structure indicates that the market has not yet gained full strength and remains somewhat under pressure. The failure to break this descending trend in the RSI is one of the key factors preventing the price from initiating strong upward moves. As we often see in technical analysis, a descending trend line on the RSI indicator is just as critical as downward trends on the price chart. Since trendline breaks in indicators often provide signals before actual price movements, a breakout in the RSI's descending trend could signal a potential major bullish move. Currently, the RSI is once again approaching this descending trend line, so we are heading toward a critical threshold. If the RSI manages to break above this trend line, it will provide a clear signal that momentum is gaining strength. This will have a direct positive impact on the price chart and could set the stage for a strong upward move from the long consolidating price structure. However, there's an important detail to watch here. When the RSI breaks its descending trend, we would ideally want to see a volume increase or a corresponding breakout on the price chart. It's not just about the RSI breaking out, supporting price action and rising volume will make this setup much more reliable. Otherwise, the RSI breakout could turn out to be a temporary and misleading move. If the RSI trend breaks strongly, we can then expect a rapid move toward the upper zones of the indicator. This would imply that the selling pressure on the price has significantly eased. A move above the 50 level on the RSI, followed by progress toward the 60-70 band, would be a clear indication that buying strength is increasing in the market and that the trend is shifting in a positive direction. It's important to closely monitor whether the RSI trend breaks or not. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.